Alright guys, so how was your trading week? I hope you had a great time. So before we look at the forecast for next week, let me show you what happened last week. So we had a very good trading opportunity on the S&P 500. We had a selling opportunity like around here, and when we got in, price almost took us out because we had a stop loss around here, so it was just a few pips away from taking us out. But eventually we had a push to the downside, we had a correction, and we had another push again to the downside. So I sent this trading opportunity in the Discord channel. So I did post this in the Discord channel, and it was actually a very good opportunity. I'm still holding this position because I have my stops at break even, like right, I think just below the break even point, because I got in here. So I had my stop straight to an area like this just to keep the position risk free. And right now we have prices around here. So when the markets open next week, I'll make a decision and see if I'll probably want to close this or keep holding it. So it just depends on what the markets do. All right, so with that being said, let's look at what we have for next week. So the first thing is the DXY, and we had this move to the upside, which we've been analyzing almost every week. We had this move to the upside, and we had prices move to the downside. Again, when you look at the way price moves, you can use different concepts or different principles. So for me, I like using one psychological number to another psychological number. And if you look at it from say 104, from the daily time frame, we had price move from 104, and you can even look at it from say 105, like right here. We had price move from 105 to 104. We had a test of this area, and then we had prices move to 103. We breached 103, but then we pulled back to that zone, and now we see prices moving to the upside. So if you're going off of psychological numbers, there's a high possibility that prices will get to 104, and if it gets a rejection, and then we'll see it coming back to the downside, or it goes through it and you see prices continuing to 105. So it just depends on what price wants to do, and all we can do is just anticipate and see what's going to happen next week. So if you move say to a lower time frame, before moving to a lower time frame, let's just put say a trend line here. And I keep saying the trend line is just a visual representation of what's happening. You can trade without this trend line, but I like using it because it just gives me that visual representation and it tells me what is happening. So if you look say here, once we had this 105 level, we had price reacting from this 105 level, we had a push to the downside. So simple price action. If price moves like so in the downtrend, each time you have an impulsive move, you have a correction, you have an impulsive move, you have another correction. And when you have an impulsive move, it's easy and it's simple for you to anticipate a correction to come in, and then you see the move continuing in that direction. So it's the same thing with what's happening on the DXY right now. So we had this area at 105 with some difficulty for price to go past that point. We had an impulsive move, we had a correction, we had another impulsive move, we've had a correction right now. So looking at it at this point, there's a high possibility that this move to the upside is just a correction, and we should expect a move to the downside. Now the areas of interest for me and point of concern will be this area of 103, the psychological number, and areas like this. So it just depends on what price wants to do. And let's look at it say from a lower time frame, say on the hourly time frame real quick. When you drop down to the hourly time frame, pay attention to what happened here at 105. So we highlighted this area on the daily time frame as a point where there was that difficulty for price to go to the upside. Then we had the impulsive move, we had a correction. Now pay attention to this part. We had again an impulsive move and prices at this point. So this is how you look at price: an impulsive move, a correction, an impulsive move, and then a correction. So as of now, it's very easy for me to say my bias will be for prices to drop to the downside. But this is just a bias, and price can do different things. So there's a high possibility we might get a break from this area and get price pulled back to an area like this. And then you see a move going to the upside. Now, that's not very likely going to happen compared to this one, the impulsive move, the correction and the drop. Correction, and then we're anticipating a drop. So when I do my focus, I like looking at the like what's most probably going to happen, and if that doesn't happen, and then I prepare myself for the opposite move. So when I look at this, I think what's most likely going to happen is this correction right here, this correction, and then a move to the downside. And if this doesn't happen for some reason, if price decides to go to the upside, and then that's fine, because price is going to do what it wants to do. All we have to do is say wait for prices to come to the downside, and then we look for those moves to the upside. So it just depends on what price really wants to do. So that's it for the DXY, and I don't think it's really difficult on the DXY. We had this impulsive move correction, impulsive move correction. So there's a high chance price is going to continue to the downside. Just looking at what's happening right here, you see this difficulty to go past areas like that. So when you do like a market focus, it's very important for you to look at the previous price action as well. So at 105 we had this difficulty. When we came down to 104, we had difficulty again. And right now, we're still having this difficulty for price to go past this point. So there's just a high chance, like the probability of prices dropping to the downside, I would say is about 60% or even 70%. There's a high possibility for prices to drop to the downside compared to say 30 or 40% for prices to continue to the upside. And again, price is going to do what it wants to do, but whatever direction price decides to take, we prepare ourselves already. We know what we're going to do if price decides to go to the upside, and we know what we want to do if price decides to continue to the downside. So that's it for the DXY. And looking at the S&P 500 and what we had already, so because we had these sales on the S&P 500, I'm still holding these sales on the S&P 500. So if the DXY decides to continue to the upside, then we might see the S&P 500 drop. And it's a little bit difficult now because right now price seems to be holding around this area, and we might see prices just go to the upside. So if you didn't get in on the S&P 500 sales, it might be a little bit difficult for you to hop in on these sales right now, because price is making lows and highs, a lower low, a lower high, a lower low. So we might get a correction and see prices come to the downside. So if you really want to get in on the sales on the S&P 500, I'll say wait for a correction to come in, and then you take those sales from the correction and see if price is going to go past this point or not. And if you really don't want to, there are other trading opportunities on other pairs. And I'll just say for the S&P 500, if you didn't get in around here, just let the S&P 500 give you more price action. Wait for certain things to happen, then you can hop in. And another possibility on the S&P 500 is if you get a reaction around this 5100 point, like here, if price finds it difficult to go past this point, then you could prepare to go in for a buy. It just depends on the price action around this point. You could decide to go in with the buy. And another possibility could be an impulsive move to the downside. So if you see an impulsive move to the downside going past, say, this area of 5100, you wait for a correction again, and then you look for selling opportunities. So when you look at other asset classes, there's a lot of opportunities coming in next week. And let's look, say, at gold. we had this massive move on gold, and gold rallied a lot during the past weeks, and everybody was trying to get in on this buys on gold, and we had a correction. And that's how price moves, because when you have a massive move to the upside, price needs a correction before the move can resume in that direction again. And that's the same thing that's happening on gold right now. We had this massive move to the upside, we had a correction, we had an initial attempt to go to the upside again, and this is all we had. Then we had prices pull back to an area like this. So with what I'm looking at on gold, there's a high possibility that price might find it difficult to go past areas like this. And if it's difficult for prices to go past an area like this, then we might see these prices continue back to the upside, maybe to test areas like this, or to test this area of like 22200. So it just depends on what happens, say, around this area. If price finds it really difficult to go past this point, then we might see the rally to the upside. Now you need to prepare yourself for the opposite. So if this doesn't happen, so the most likely thing on gold is for us to see these prices move to the upside and eventually drop, because we've had this massive move. So we need to expect a pullback to come in, or that correction to come in, and the correction needs to be massive as well. But looking at what price is doing like right now, if you position yourself here, the most reasonable thing for you to do is you look for buying opportunities if this area proves to be very strong or difficult. So if this area proves to be an area where sellers can go past, then the most likely thing for you to do is look for buying opportunities to the upside. Now, depending on your trading strategy, your trading approach and everything, you might take out profits here, or an area like this. It just depends on you. But just looking at price action, there's this difficulty for price to go past this area, and there's this difficulty. So we might see prices moving to the upside. Now, if this doesn't happen, you need to prepare yourself for the next possible thing. And the next possible thing will be for price to move to the downside as an impulsive move. You get a correction, and then you see prices moving to the downside, maybe to test areas like 2100. And because we had this massive move to the upside, we should expect a massive correction as well. And if gold decides to move to the upside, we need to see this correction come in, then we see the massive move to the upside. So just have this in mind. If price finds it difficult to go past this point, we'll look for buying opportunities. And if it goes through eventually, you wait for the correction, and then you look for selling opportunities. Looking at US30, we had a similar sell that came in on US30 and the S&P500. So we had this similar sells that came in. If you didn't take these sells on US30, and you really want to participate on this move to the downside, because price is putting in lows and highs, or lower lows and lower highs on US30. So you have a low right here, you had a pullback or a correction, you had a high, you had a lower low, now you have your lower high. Price has given you a new lower low. So if you really want to get in on the sales on US30, you need to wait for a correction to come in, then you look for selling opportunities. But with US30, I'll be a little bit cautious, because we've had this area right here where price found it difficult to go past this area before. So if you see a correction that comes in on US30, you might take these sells, but be very cautious of areas like this. So if price eventually gives you a correction and you take a sell, look for exits around this area, and then you wait, because we might see prices continue to the upside if it gets to this point and it's difficult to go through. So with US30, another thing you can do If you don't want to take the sells, you wait for prices to go past areas like 39000, this area right here. You wait for that pullback to come in and you look for an opportunity to go to the upside. So it's a lot you can do on other asset classes, and if you think it's difficult for you to hop in on US30 right now, just let it be. Now there's another opportunity on US30. So if prices go past this area, which has been an area that prices couldn't pass before, if prices drop to the downside impulsively, you wait for another correction, you take those sells. When you have everything analyzed, focused before the week comes in, it becomes very easy, because when price plays out, you just hop in and do what you're supposed to do. Let's look at another currency pair, NAS100. Now with NAS100, my initial bias on NAS100 is to go long, and I'll tell you why I'm looking at buying NAS100. So we had prices moving to the upside. We had difficulties to go past this point, and we had a correction. So when price moves to the upside, you wait for the correction, and then you wait for those opportunities to buy somewhere here, which we had around here. When these buys came in, it was difficult for prices to go past an area like this. So I've been watching NAS100 over the past weeks. So what happened actually is we had this difficulty for prices to go past this point. We had this difficulty again here, and right now we've had prices around this area. So looking at it from, say, simple price action, you have prices moving to the upside, you have a correction, you have a buy, difficult for prices to go past this point. So normally when you have price action like this, you should see the sellers step in impulsively and make new lows. But because price is finding it difficult to go past this point, it's a no-brainer. You should see prices move to the upside. That's my primary bias on NAS100. And the only way I'm going to sell or take sells on NAS100 is if we get an impulsive move from here. I'll wait for that correction and look for other sells. Then I'll confirm this move and say, we had this initial point, we had a low, a lower high, and now we've had a lower low. So I'll wait for the correction to come in, giving me this lower high, and then we'll get a drop to the downside. So with NAS100, it's pretty easy. My initial bias is look for these longs on NAS100, and if it doesn't happen, and then I'll prepare for the second option, which is an impulsive break to the downside, a correction, and then we get a sell. And let's look at the last one, USOIL. So with USOIL, it's a very interesting pair, because when you look at this piece of price action is so confusing. You've had prices move to the upside, you had a correction, you've had prices move to the upside again. Price action again, 101. You have a move to the upside, you have a correction and move to the upside. You should expect a correction to come in, and then you look for buying opportunities. So right now on USOIL, let's focus on this piece of price action right here. So we had prices putting in highs and lows, giving us this uptrend. We had a correction right here, an initial attempt from the buyers to go up, that difficulty. So we need to wait for sellers to come in, then we look for buying opportunities. It could come to an area like this, and there is that difficulty to go past this point. I'll still look for buying opportunities. If price finds it difficult to go past this point, I'll look for buying opportunities. Now, this might be a little bit difficult, because if the correction, when you have a massive move, so you have a massive move and you have a correction like this, if you have a tiny correction, the buys that might come in from here might not sustain to the upside. compared to a correction like this. When you have a deeper correction, then the buyers might come in impulsive as well, taking prices to the upside and eliminating this highs that was created. So on oil, I'll be a little bit cautious, and I might actually need a deeper pullback on oil, maybe to an area like this, to 80. Then we'll look for these buying opportunities. Again, if price can't really go past this point, I'll still look for buying opportunities. The difference is, if I take buys from here, I'll prepare myself to exit, say around here or here. It just depends on how price moves. But I have a bias on oil to go long. It just depends on how the correction comes in. So I'm watching this closely, and if this doesn't happen, let's say sellers hop in impulsively, and I need to go in with the sales. I need to see prices come in impulsively, and then I wait for a correction to test an area like this, and we look for selling opportunities. So I think there's a lot that's going to happen next week. There's going to be a lot of opportunities. I'm just going to watch these different asset classes and look for the best one, maybe one or two asset classes. So I might have 2 trades next week, and I'm still holding the trade on the S&P 500 as I told you guys. So I'm still holding this trade on the S&P 500. I might close this when the market's open, or it just depends on what happens during the initial hours of next week. We might have a push to the downside, and I'll close this manually. It depends on how price plays out. But that's it for this week, guys, and I hope you had a lot of value from this content. And if you found it interesting, don't forget to hit the like and subscribe button, and check out these previous videos to catch up on everything that's been happening on this market focus. And thanks for being there. Thanks for watching. See you during the next one. Bye for now.